All right, so let's jump into it. Say you've got $5,000 ready to invest.
Okay.
And you want growth.
Yeah.
But you also want value, like that sweet spot, right?
Right.
It's hard to find. This article, though, had 3 companies that that I think are worth looking at.
Interesting.
One of them really caught me off guard, to be honest.
Really?
Yeah. So we're talking bargain growth stocks today.
All right.
And trust me, there's some surprises.
I like surprises. I mean, what I find interesting is how this article goes beyond like the typical places where you'd think to look for growth stocks.
Right.
You know what I mean?
Yeah.
It really makes you rethink like those preconceived notions of where to find value.
Exactly. So first up, Pfizer. Now, you wouldn't typically think of a pharmaceutical giant as like a growth stock.
Right. Right. Yeah. I'd probably label it more blue chip.
Yeah.
But
yeah, there's more to this story than meets the eye.
If you look closer, you know, their sales plummeted like over 40% last year.
Yeah.
Primarily because COVID-19 vaccine and treatment revenue just dropped off a cliff.
Right.
But that's not the whole story.
Okay.
They're investing like heavily in new drug development.
Oh, interesting.
Particularly in this hot area of GLP-1 drugs.
GLP-1.
Yeah.
What's that?
It stands for glucagon-like peptide 1.
Okay.
They're used for weight loss.
Oh, okay.
And Pfizer's potential in this market is like huge.
That's interesting, right? Because weight loss medications are
it's a huge,
a really hot topic right now. Everyone's talking about it.
Absolutely. And their potential game changer is this GLP-1 pill called danuglipron.
Danuglipron.
Yeah. It's still in clinical trials,
right.
But if approved, it could be one of the first GLP-1 pills on the market.
Wow. So they're not just like jumping on the trend. They're trying to position themselves at the forefront.
At the forefront of this, burgeoning market.
That's really interesting. So it's not a Star Wars robot after all. But danuglipron, that's a name to remember, I guess. If this pill takes off, it could be massive for Pfizer. It
could be. But, it's smart to be aware that it could be years before danuglipron is generating, like, serious revenue.
Okay.
And this is where Pfizer's diverse portfolio really shines, I think.
How so?
Because they're not just relying on, a single product for growth. Unlike some companies that are putting all their chips on weight loss, Pfizer has like a wide range of products and revenue streams, making them more, stable, a potentially less risky play.
So more of a slow and steady wins the race kind of approach.
In a sense, yeah.
So the article mentioned that their stock price is down 10% this year, and it's near its 52-week low. With a forward price to earnings ratio of less than 9. That's starting to sound like a pretty attractive deal for value investors.
It does, yeah. It's all about finding those companies, with solid fundamentals that might be like temporarily undervalued.
Right.
So let's switch gears to a sector that might raise some eyebrows. Oil and gas.
Okay.
Our next company is ExxonMobil.
Wait, an oil and gas giant as a growth stock?
Yeah.
I got to admit, I'm a bit skeptical about that one.
Okay.
With the push for renewable energy, isn't oil kind of, yesterday's news?
It's true. There's a lot of talk about the energy transition, rightfully so. But the reality is that oil and gas are going to be, vital parts of the global energy mix for years to come.
Okay.
I mean, ExxonMobil isn't just sitting back and watching the world change.
Right.
They're making, aggressive moves.
Like what?
Their recent acquisition of Pioneer Natural Resources is a prime example.
Yeah.
This deal more than doubled their presence in the Permian Basin.
The Permian Basin. Okay,
Yeah.
I've heard that name.
Yeah, one of the most productive oil-producing regions in the U.S.
Okay. What's the significance of that region?
It boils down to cost-efficient production. The Permian is known for its relatively low production costs, making it a highly profitable area for oil extraction.
So they're doubling down on oil production.
Well, they're doubling down.
At a time when many are shifting away from fossil fuels.
Right.
That's a bold move.
It is.
But isn't it risky considering, how volatile oil prices are?
There's always inherent risk with, commodity-based businesses.
Right.
But ExxonMobil is mitigating that risk by becoming larger and more efficient.
Okay.
This allows them to, ride out the ups and downs of the market
Right.
and still generate substantial profits.
Okay.
Look at their track record.
Yeah.
They've pulled in about $115 billion in profit.
$115 billion.
Over the last 3 years alone.
Okay, $115 billion. That's a pretty compelling argument. And the article mentioned that their stock is currently trading at 13 times next year's earnings.
Mm-hmm.
That sounds like another potential bargain for investors who are, in it for the long haul.
Precisely. And that's a key takeaway here. We're not talking about get-rich-quick schemes.
Right.
We're exploring companies with, like, strong underlying fundamentals that could offer significant growth over time.
Yeah.
Especially if you can get in at a good price.
Yeah.
So.
Okay, so I'm starting to see the appeal of these so-called bargain growth stocks.
Yeah.
But our final company takes us from the oil fields to the open ocean.
Yeah.
We're talking about Carnival Cruise Line.
Oh.
This one really piqued my curiosity because haven't cruise lines been struggling lately?
The travel industry has definitely faced some headwinds.
Yeah.
But Carnival is, like, a fascinating case study in resilience.
Oh.
Their business is booming, shattering records left and right.
Booming.
Yeah.
I thought people were cutting back on travel and experiences. What's fueling this resurgence for Carnival?
Well, their recent performance has been stellar. I mean, in the third quarter alone, revenue jumped by 15%.
Wow.
Reaching nearly $8 billion, and net income soared by a staggering 62% year over year.
Wow.
Part of their success can be attributed to their business model.
Okay.
People typically book cruises, well in advance, creating like a consistent stream of revenue and predictable earnings, even when there are, short-term fluctuations in travel trends.
So they've got like a built-in buffer against economic uncertainty.
Yeah, you could say that.
That's pretty smart. And the article mentioned that Carnival is like incredibly optimistic about the future.
Yeah.
They're projecting 2025 to be fantastic.
Yeah.
And 2026 is already off to a record-breaking start.
That's what they're saying.
So.
Yeah. And that optimism is reflected in their stock performance, too.
Okay.
Which has surged, over 40% this year.
Wow.
But here's the kicker. Even with that, impressive run, their forward price-to-earnings ratio is still only around 15.
So there's still room for growth. Even after such a strong run. That's really interesting.
That's what the numbers suggest.
Yeah.
It seems like Carnival might still be undervalued, given its strong performance and positive outlook. It's definitely a company worth, keeping on your radar.
Well, we've covered a lot of ground here. Pfizer, ExxonMobil, and Carnival.
Yeah. 3
very different companies, each with a unique story. But what's the common thread? What makes them potential bargain buys?
Good question, I think. The common thread here is finding value where others might not be looking.
Yeah.
These companies aren't necessarily like the hottest names in the market, but they have solid fundamentals.
Right.
And they might be trading at a discount relative to their, growth potential.
So classic value investing, but with a growth twist.
Exactly. It's about being a bit contrarian.
Yeah.
Looking beyond the hype.
Right.
And focusing on the underlying value.
It's interesting how each of these companies ties into like these broader market trends, like Pfizer tapping into the growing demand for weight loss solutions.
All right.
ExxonMobil capitalizing on the, continued global reliance on oil, and Carnival riding the wave of the travel rebounds.
Right.
Like each company is a piece of a puzzle.
I like that.
And by examining them, we get the glimpse into the larger economic landscape.
Absolutely. It highlights the importance of understanding, not just individual companies, but also the forces that are shaping like entire industries.
Okay, so we've talked about why these companies might be good buys.
Yeah.
But let's get down to, brass tacks.
Right.
If you had $5,000 to invest, which of these 3 stocks would you personally be most interested in?
That's the $1 million question, right? But, of course, I can't offer financial advice.
Of course.
It's important for everyone to do their own research and make decisions based on, their own individual circumstances.
For sure.
But I can share what stands out to me about each company.
Yeah, let's hear your thoughts.
Okay, so for Pfizer, their dedication to research and development really intrigues me.
Okay.
They're not just, resting on their laurels.
Yeah.
They're actively looking for new ways to grow and their foray into the weight loss market.
It's a prime example of that. And even if danuglipron doesn't become a blockbuster drug, their diversified portfolio provides a level of stability that's attractive.
So you're drawn to their commitment to innovation and their ability to weather storms, so to speak.
Yeah, I think so.
What about ExxonMobil?
Yeah.
Does their bold move in the Permian Basin make them a contender in your eyes?
Their acquisition of Pioneer Natural Resources definitely caught my attention.
Yeah.
It's a clear signal that they're serious about staying ahead of the curve in the, oil and gas industry.
Yeah.
They're not just riding the wave, they're actively shaping their future.
So they're not passively waiting for the energy transition to happen. They're taking steps to ensure they remain profitable even in a changing landscape.
Yeah.
That's interesting. What about Carnival? Are you sailing aboard their ship, so to speak, given their impressive comeback?
Carnival's resilience is admirable. Their business model, with its emphasis on, advanced bookings, provides a degree of predictability.
Okay.
That's valuable in an often, volatile industry.
Right.
And their current performance suggests they're well positioned to capitalize on the continued, travel recovery.
So we've got 3 potential contenders.
Yeah.
Each with its own strengths and weaknesses.
Right.
It's like choosing between apples, oranges, and, cruise ships, as you said earlier. What factors should our listener consider when making this decision?
Well, it boils down to, personal risk tolerance,
Right.
investment goals,
Okay.
and time horizon. Someone with a more conservative approach and a long-term outlook might be drawn to Pfizer's, stability and diversification. Those who are comfortable with a bit more volatility and seeking potentially higher returns might find ExxonMobil's growth potential enticing.
Okay.
And for those who, believe in the travel industry's continued rebound
Yeah.
and are looking for a potentially undervalued stock, Carnival might be worth a closer look.
So it's all about finding the right fit for your own personal investment style?
Right.
There's no one-size-fits-all answer here. Regardless of which company our listener finds most interesting, what's the most important thing to remember before investing?
Do your homework.
Yeah.
Never invest in something you don't fully understand.
Right.
Read company reports, look at their financials, and seek out diverse perspectives before making any decision.
Couldn't agree more. Information is power, especially when it comes to your finances.
Absolutely.
So as you consider these potential investment opportunities,
Yeah.
weigh the risks and rewards carefully,
Right.
do your own research, and, most importantly, invest wisely.
Wise words.
Speaking of new opportunities, this deep dive has really opened my eyes to the potential of looking beyond, the obvious, those flashy names everyone's talking about.
Yeah.
It's a good reminder that sometimes the best investments are the ones that fly under the radar.
Absolutely. And who knows, maybe one of these seemingly, unassuming companies will turn out to be the hidden gem in your portfolio.
Now that's an exciting thought.
It is, right?
Unearthing a hidden gem that takes off, that's the dream for any investor.
Yeah.
But even if these companies don't reach those, astronomical heights,
Yeah.
their current valuations and potential for growth make them worthy of, consideration.
I agree. It's all about finding those diamonds in the rough.
Yeah.
And sometimes all it takes is a deep dive to uncover them.
Well said. Speaking of deep diving, we've covered a lot of ground today,
Yeah, we have.
exploring the potential of Pfizer, ExxonMobil, and Carnival, examining how they connect to, larger market trends,
Right.
and emphasizing the importance of, informed decision-making.
Right.
We've given our listener a lot to think about.
I think so.
But before we wrap up,
Yeah.
I want to circle back to our initial scenario. You have $5,000 to invest,
Right.
and you're looking for growth stocks that offer good value.
Yeah, that classic investor's dilemma, the quest for the perfect balance between risk and reward.
Exactly. So based on what we've discussed today,
Yeah.
which of these 3 companies stands out to you the most?
That's a tough one.
I know, right?
All 3 companies present compelling arguments.
Yeah, they do.
But I think what intrigues me most is
That's a tough one. All 3 companies present compelling arguments. But I think what intrigues me most is Pfizer's move into the weight loss market. It's such a bold move for a company known for, more traditional pharmaceuticals.
Yeah. It is a fascinating development. They're really leaning into personalized medicine
Right.
and recognizing the enormous potential of this market.
Yeah.
It's a smart play that could pay off big time if their GLP-1 drug,
Right.
proves successful.
Exactly. And even if danuglipron doesn't, hit it out of the park,
Right.
they have a solid foundation to fall back on. That diversification makes me feel a bit more comfortable as an investor.
I understand that diversification can be a powerful tool for managing risk,
Yeah.
especially in sectors like healthcare where innovation moves so rapidly.
It's like having a safety net, but still allowing for the possibility of those exciting high growth returns.
Precisely. But let's not forget about, ExxonMobil and Carnival.
Right.
They both offer unique opportunities for investors, too.
Absolutely.
Yeah.
ExxonMobil's strategic focus on efficiency and profitability is impressive, especially at a time when, the oil and gas industry is facing so much scrutiny. They're proving that you can adapt and thrive even in a changing landscape.
Right. Their commitment to maximizing value in their core business is clear.
Yeah.
And let's not overlook Carnival's, remarkable comeback story.
Right.
Their resilience is a testament to the enduring appeal of the cruise experience.
Yeah.
And their ability to cater to, evolving traveler preferences.
It's a good reminder that even industries that seem to be facing headwinds can rebound and deliver strong returns for investors who are, willing to take a chance.
That's the beauty of the market. There are always opportunities for those who are willing to, look closely and do your research.
This deep dive has been a real eye-opener. It's shown me the importance of thinking outside the box, of looking beyond. The usual suspects for growth value investing can be so much more than just searching for, cheap stocks.
Right.
It's about identifying companies with strong fundamentals.
Absolutely.
A clear vision for the future and the ability to, execute on their plans.
Well said. And it's about understanding the larger context,
Yeah.
the economic and societal trends
Right.
that shape industries
Right.
and drive consumer demand.
We've explored 3 very different companies today, each with its own story and potential for growth.
Yeah.
But ultimately, the best investment is the one that aligns with, your personal goals,
Right.
risk tolerance, and time horizon.
I couldn't agree more. There's no one-size-fits-all approach to investing.
Right.
It's all about finding the right fit for you.
So, as we wrap up this deep dive, I want to leave you with this thought. Keep exploring, stay curious, and never be afraid to challenge your assumptions. Sometimes the most unexpected companies can offer the most, rewarding opportunities.
And remember, knowledge is your most valuable asset. The more you learn, the better equipped you'll be to navigate the complex world of investing.
Right.
And make decisions that will help you reach your financial goals.
Thanks for joining us on this deep dive into the world of bargain growth stocks.
Yeah, thanks for listening, everyone.
We hope you've gained some valuable insights and are feeling inspired to continue your own investment journey.
Until next time, happy investing.